Imagine a world where governments worldwide are exploring the issuance of their very own central bank digital currency. It's a clear sign that the central banks are now entering the cryptocurrency space. Until recently, this seemed completely impossible. Central banks storing digital assets. Hold on to your hats, folks, because it's happening. Hello, and welcome to CoinEngine. In today's video, we'll be exploring why central banks around the world have become so interested in cryptos lately. What does it mean for traditional banking systems moving forward? What implications does this have for global markets? Is it an exciting or potentially scary development? Let's find out. But before we continue with the video, don't forget to subscribe to the channel and click the bell to get more amazing content. Now, let's get this video started. Which countries have initiated CBDC offerings? In the past few years, there have been various reports of governments around the world exploring the issuing of their own central bank digital money. In fact, 9 countries have implemented CBDC offerings to date. Consequently, the digital yuan was utilized extensively at the 2022 Winter Olympics. The Bahamas, the Marshall Islands, and Nigeria are examples of countries that have launched comparable schemes. However, it has been stated that Nigeria's Naira has had a low adoption rate thus far, and that the others have fared similarly. In addition, India has initiated a test program for its digital rupee, while Mexico's central bank has announced that digital peso will be released within the next year. Despite the apparent enthusiasm, an increasing number of voices in mainstream banking and among the world's central banks have begun to question the long-term feasibility and effectiveness of CBDCs. Tanzania, an East African nation, stated in 2021 that it would implement a CBDC, a move that has been eagerly anticipated. However, it recently published a statement indicating that while it was still considering the introduction of a state-backed digital asset at some point in the future, it would take a phased, cautious, and risk-based approach due to a number of obstacles that could damage its implementation plans. Skepticism towards CBDCs isn't anything new. In the past few years, skepticism towards CBDCs has been prevalent. In his 2020 speech, United States Federal Reserve Chair Jerome Powell stated, "It is more vital for the United States to get it right than to be first." This phrase reflects the mentality of many central bankers today, particularly in the more developed nations. During bull runs, even the most firmly orthodox central bankers feel obliged to respond to increasing market capitalizations and mounting fear surrounding digital assets. As a result, we may be seeing more officials express their skepticism of CBDC today. However, when a bear market ensues, a large number of critics appear. This may explain why 114 countries, representing over 95% of global GDP, are now working on a CBDC. The advancements in regulation and the emergence of private solutions may account for the reluctance of many governments to issue a CBDC. Despite widespread skepticism regarding CBDCs, everyone seemed to be hedging their risks and working on them nonetheless. What are the risks associated with CBDC? While some experts appear to be quite optimistic about CBDCs, not everyone is on board. Numerous sovereign nations are hesitant to implement CBDCs due to widespread concerns about their potential impact on the stability and integrity of their existing financial systems. Recently, 4 nations, Denmark, Japan, Ecuador, and Finland, publicly announced the cancellation of their CBDC adoption plans due to multiple factors, including economic difficulties and development process obstacles. Therefore, the formulation and implementation of the CBDC policy should be viewed from a developmental vantage point and incorporated as such. CBDCs have the potential to fundamentally alter the global financial structure, and their introduction has a significant impact on the traditional deposit and lending model of commercial banks. At the same time, CBDCs that pay interest will divert a portion of investors from low-risk assets. Additionally, CBDCs require substantial investments in capital, talent, and technology. Long-term investments are required to maintain data, systems, and services. Such costs are expensive for some nations. But why are CBDCs a better solution? Approximately 90% of the world's central banks are pursuing CBDC projects due to their many benefits. For instance, they offer increased payment efficiency, regulatory stability, audit transparency, reduced transaction costs, and improved cross-border transfer capacity. Given the ongoing decline in cash usage, the widespread interest in digital assets, and the persistent concerns over sovereignty and monetary stability, central banks appear highly motivated to continue investigating the potential of CBDC. As the technology and infrastructure for CBDCs continue to develop, it is possible that more central banks will become receptive to the notion of issuing a digital version of their currency. It is important to keep in mind that this is still a relatively new area of research and experimentation, and it may take central banks some time to fully comprehend the potential consequences and benefits. Can a middle ground be found? Cultivating a decentralized financial ecosystem that simultaneously taps into permissionless and permissioned networks is a viable solution that could help advance CBDCs. A consortium network would not only aid in the creation of greater transparency through immutable transactions, but it would also mitigate transfer delay-related issues. It could also prevent any conflict of interest among financial players with their own CBDC implementations. As a result of the ongoing crypto winter, central banks are not necessarily concerned with the most recent developments in the digital asset industry. Despite this, positive developments have continued to occur in the area. It will be fascinating to observe how the CBDC paradigm continues to develop and mature as more and more individuals gravitate toward digital currencies. What are your thoughts on the matter? Tell us in the comments. If you enjoyed the video, please like it and subscribe to the channel. Thank you for your time. We'll see you later.